Welcome back. Previously, we were discussing about fund flow statement, the meaning of fund flow statement, its concept, methodology, and preparation of fund flow statement, and various application level cases in which we have dealt with almost all adjustments. And from right now, let us discuss about what is meant by cash flow statement and what the methodology of preparing cash flow statement and why there is a need for learning a cash flow statement apart from a fund flow statement. Cash flow statement. If you are familiar with fund flow statement, then the cash flow statement will be quite easy to cover. As the name suggests, cash flow statement is a statement which is used or prepared to study the flow of cash. Management of liquidity or cash flow is an important aspect for successful functioning of any business. Cash is required at every point of the business, right from the formation to the winding up. Cash is the most liquid form of current assets, and maintenance of sufficient cash is a prerequisite for the smooth functioning of the business. Therefore, it is necessary to make a cash flow analysis by preparing a cash flow statement apart from preparing a fund flow statement. In fund flow statement, we have learned in detail the change in the fund or the various sources and applications of fund. So why there is a need for the cash flow statement? As I have mentioned earlier, fund flow statement study the flow of fund. Fund generally includes cash, cash equivalents, and all other items that comes under the working capital aspect. And why there is a need for a preparation of cash flow statement? In fund flow statement, it studies in general sense only, studying the flow or situation or the position of fund of the business in general sense. But in cash flow statement, it accurately pinpoint the cash position of the organization. Then why there is a need for pinpointing the cash flow of the or cash position? Because whatever the business, whether it is a big organization or a small organization, it is very much important to maintain proper liquidity within the organization. Only through maintaining such proper liquidity, the organization can survive this extremely dynamic business environment. Then why there is a need for liquidity instead of maintaining funds? Simple example means if I went to a tea shop, I might be a businessman and I have a lot of money in the bank or deposits or invested in real estate, whatever it is. I went to a tea shop and got some tea, and I don't have enough money to pay for the tea. What will be the condition of me? It will be utter embarrassing for me for not paying or not having sufficient money for paying the cost of a tea. That is the condition of the business. Whatever the fund position in actual business, fund is not an important factor because it is up to the cash position only, the scale of the or the liquidity position of the organization is measured. Only on the base of that liquidity only, then an organization can survive in a business. That is why there is an importance for cash flow statement rather than fund flow statement. Because liquidity is an important factor in a dynamic external business environment. That is the reason why we are learning cash flow statement. And you may come with a doubt, then why we are learning fund flow statement? Because fund flow statement is also an important aspect, but when it comes to decision making, cash flow statement is more superior and important than fund flow statement. Because fund flow statement is also needed because fund flow statement helps in giving a clear picture regarding the working capital position of the organization. Working capital position is important for day-to-day activities of the organization. So even though our fund flow statement has its relevance, when it comes to the importance, cash flow statement is more important than fund flow statement. That is the actual core between meaning of cash flow statement and fund flow statement. So let us discuss some of the various aspects regarding the cash flow statement. Next one, meaning of cash. We need not have to give an explanation regarding the meaning of cash, because we are commerce students and we know what is meant by cash and what is the meaning of cash. The term cash includes cash and cash equivalents, and the cash equivalents means cash in hand, cash at bank, short term investments or marketable securities. And regarding the short term investments are highly liquid and can be converted into cash on demand or short notice. So in cash flow statement, we give importance to cash and cash equivalents, where anything that can be quickly converted into cash are given more important. These are not held for real return but to meet the liquidity requirement of the business, because liquidity requirement of the business has to be dealt quickly in order to survive in the business. That is the meaning of cash. Next one, meaning of cash flow statement. We all know what is meant by fund flow statement, because studies the flow of fund. Likewise, cash flow statement also studies the flow of cash. So, a cash flow statement can be defined as a statement which explains the reasons for change in the firm's cash position during an accounting year or accounting period. It discloses the sources from which the cash has been generated and the areas in which the same cash has been used during that year, and the net change in cash position at the end of the accounting period is studied in detail. That is the main purpose of cash flow statement. A cash flow statement is prepared to analyze the sources of inflow of cash and uses for which cash flows are applied. It helps the management in planning cash flows and ensuring adequate liquid cash at every point of time. So, cash flow statement helps the management in identifying the reasons for change in cash position during the period. So there will be a question arises that what is the difference between cash flow statement and a cash flow? Because right now or just previously I have mentioned that cash flow statement helps in studying the flow of cash, it helps in identifying the liquidity, it helps in maintaining the liquidities. Liquidity is so important, likewise and such like that. And we all know we have been preparing cash book from plus one onwards, and we know what is in my cash book. So whenever since we are preparing cash book, why there is a need for cash flow statement? The main reason is that cash book reveals the cash position of the organization. That is, during the period, how much cash is there in hand or at bank during the period. But it doesn't depict the reason for change during the period. In that area, cash flow statement helps the organization in identifying the reasons for increase in cash flow or the various sources from which cash has been raised, and for the areas in which the same cash has been utilized. That is the difference between cash flow statement and a cash book. So, a cash book is a detailed and complete record of all receipts and payment of cash. We all know that. It is a chronological record of cash transaction, periodically balanced to ascertain the cash balance. It only identifies a cash balance. It doesn't depict the reason for that cash balance. Whereas a cash flow statement is a summarized statement showing the cash inflows and outflows during an accounting year. It explains the reasons for changes in liquid cash during the accounting period. That is the main merit or main use of cash flow statement when it comes to cash flow. So, as we have mentioned earlier that the cash flow statement help in such and such way in helping the decision making or activities of the organization so that the organization can plan accordingly. Likewise, we have dealt that area just now. In that case, what is the difference between cash flow statement and a cash budget? Because previously we mentioned that cash flow statement helps the organization in planning regarding the various cash position of the organization. Then what is the difference between cash budget? Because cash budget also helps the organization in planning the cash utilization for a certain period. Then what is the difference between cash flow statement and a cash budget? Because we know what is meant by cash budget and whether there is a need for cash flow statement when we are preparing a cash budget. The concept is a cash flow statement is also different from a cash budget. That is the main concept. Because a cash budget is a summarized estimated receipts and payment of a cash prepared for a certain period of time. It is a blueprint of an action for which certain plans have been set aside for its implementation in future. It may be prepared on monthly basis, quarterly basis, likewise depending upon the requirement of the organization. That is the main purpose of cash budget. Whereas a cash flow statement is prepared for a whole accounting year showing the actual cash inflows and cash outflows during that period. However, a projected cash flow statement may be prepared similar on the lines of a cash budget for the next accounting year. From the explanation, you can understand that cash flow statement is having a wider scope when it comes to the cash budget. In cash budget, proper plans are made, but it is made for a certain purpose or a shorter period. We are not always preparing cash budget for an accounting period alone. Whereas cash flow statement is usually prepared for an entire accounting period in which it will help in identifying the reasons for change or flow of cash as well as providing sufficient information to the management in taking necessary actions for implementing various financial policies to maintain the proper liquidity of the organization. That is the difference or the main meaning of cash flow statement. That is what it is making the cash flow statement more different from cash budget. So these were the various aspects relating to the cash flow statement. Next, let us go directly to the preparation of cash flow statement because it is almost similar to fund flow statement. So we will be dealing the same pattern and principle of preparation. There will be slight change regarding the preparation and regarding the format. In fund flow statement, even though we are preparing a pattern of computation, it doesn't have a proper prescribed format. But whereas cash flow in fund flow statement, there is no prescribed format. But in cash flow statement, there is a proper standard and proper format for preparation, and also there is an accounting standard for preparation of cash flow statement. AS3 deals with preparation of cash flow statement. And regarding the preparation of cash flow statement, for preparing the cash flow statement, first of all, you need not have to prepare schedule of changes in working capital because here we are dealing with cash. So we need not have to study the flow of working capital during the business. So first step we need not have to follow in the cash flow statement, which we have followed in the fund flow statement. So here we will start with preparation of non-current accounts and ascertain inflow and outflow of cash. We all know how to prepare non-current accounts. It is usually prepared on the basis of additional information and depending upon some peculiar items we found in the question. First of all, it is prepared on the basis of additional information. So first step, preparation of non-current accounts. Next one, calculation of cash from operations for the current year. Cash from operation for the current year is just like preparation of fund from operation. We all know how to prepare fund from operation. If you know the principle of preparing inflow statement, it will be quite easy to identify the cash from operation during the period. Next one, finally you have to prepare cash flow statement as per AS3. Actually, cash flow statement computations and methods are quite easy when compared to fund flow statement because the format is very simple. Even though we have to prepare some non-current accounts and its computation, still the format is very simple. And these are the major 3 steps that has to be followed while preparing a cash flow statement. And regarding the cash flow statement, it has to be prepared as per the AS3 format. And as per the AS3 format, a cash flow statement is split into 3 main parts. And why we are preparing like that is, in cash flow statement, it helps the organization in identifying the sources of cash as well as application of cash. In simple sense, we can say that inflow of cash as well as outflow of cash. And we all know what are the various inflow of cash. It is almost similar to the method that has followed in the fund flow statement. Inflow, we know what various examples of inflow we have dealt many cases like issue of shares, issue of debentures, long-term loans raised, sale of fixed asset, sale of investment, cash from non-operating activities and cash from operation. That may be the various sources. We have dealt the same cases in the fund flow statement. It is almost similar to the same pattern. And we also have learned various outflow of cash. It mainly include purchase of fixed assets, purchase of investment, redemption of shares or share capital, repayment of debentures, repayment of term loans, dividend paid, tax paid. If you remember these examples which we have dealt in the fund flow statement, then it's okay. These are some of the examples of cash inflows as well as outflows. On the basis of these examples, it helps the organization in identifying the liquidity position. But the issue is that we have discussed the various sources or some of the examples of cash inflows as well as some of the examples of cash outflows. The thing is that we need to exactly pinpoint the various source from which the cash has been generated. Then you may think that issue of shares means cash generated from the raising shares. It doesn't work like that, because in a large organization we can't pinpoint like each individual item. So we need to categorize all these sources as well as applications on the basis of 3 areas that are: first one, cash from operating activity. We all know what is meant by operating activity. We will be discussing in the next slide. Next one, cash from investing activity. I hope you are familiar with these terms: operating, investing, likewise. And finally, cash from financing activity. So these are the 3 areas for which you have to split the entire cash flow statement accordingly. Previously, we have mentioned that a cash flow statement is a compulsory statement, and a cash flow statement consists of 3 main parts. So let us discuss the 3 parts in detail. The 3 main heads are cash flow from operating activity, cash flow from financing activity, and cash flow from investing activity. Actually, the order is operating, investing, and financing. Let us discuss the 3 main areas. First one, cash flow from operating activity. As the name suggests, it is the flow of cash or the cash generated from the operations of the business. And why we are specifying operations means the financial statement or the final accounts usually represents the profitability or operational returns on the base of all items, that is operating items as well as non-operating items. In order to find the actual cash flow within the business, you need to identify the operating activities. And on the basis of those operating activities only, you can identify the actual cash flow. So the first head is cash flow from operating activity. As I have mentioned earlier, these are the cash flows from regular course of operations. For example, if I am a bakery, if I run a bakery business, my mode of activity is selling of cakes, pastry, and all such bakery items. And my cash inflow from that operating activities will be the sale of bakery items, or likewise. It doesn't include if I earn any money from the rent of a shop for which I have rented or I have given it for lease to someone else. The income from such source cannot be considered as an income or cash flow from operating activity, because my operation is selling of cakes and pastry, and rent earned from the shop for which I have leased to someone else cannot be considered as an operating activity. That is the concept. And some of the examples of cash flow from operating activities include cash sales, cash received from debtors on account of credit sales, cash purchases of goods, cash paid to suppliers on account of credit purchases, wages paid to employees and staff, cash operating expenses, and finally income from investing activity. You may think that why the income from investing activity comes under this head. We will discuss that part when we are discussing cash flow from investing activity. Next one, cash flow from investing activity. As I have mentioned earlier, computation of cash flow statement consists of three main heads, and first head was cash from operating activity. Next one is cash flow from investing activity. Investing activity, as the name suggests, we might invest our hard-earned cash in some various ventures like purchase of assets. We will discuss that examples. So if you are investing your funds or cash, especially cash in any particular investing activity, such flow is known as cash flow from investing activity. So you need to identify for what all areas in which you have invested your cash. So it includes purchase and sale of fixed assets like land, building, equipment, machinery, etc. Acquisition or disposal of long-term investment like government securities, shares and debentures of the company also comes under investing activity. These are separately disclosed in the cash flow statement. We will be discussing in detail regarding the cash flow from the investing activity during the application part. Anyway, you need to understand that cash flow investing activity is quite simple. It includes your investment in fixed assets, and at the same time any sale or disposal of fixed assets. Such activities comes under cash flow investing activity. Apart from fixed assets, you might sometimes record some extra items like interest on investment. Likewise, we will discuss that extra items during the discussion of adjustment cases while preparing cash flow statement. So just you need to understand, first one cash from operating activity, next one cash flow from investing activity, and finally cash flow from financing activity. And earlier I mentioned that here you have written income from investing activity, and after that we will be preparing cash flow from investing activities. And what is the concept or meaning of these two? Income from investing activity, this item is recorded in a question where, remember, in that question, read the question very wisely. The question sometimes may be related to any investment venture companies. So for an investing company, their main operation will be investing in various activity. So income from an investing activity of an investment company is actually an operating activity. That is how this item comes under cash flow from operating activity. And you may think that, so if in case of an investing company, does they have cash flow from investing activity head? Yes, they will have, because investing company may invest in fixed assets. Such items has to be recorded under this head. And you may very rarely find such questions. For time being, I am just mentioning the concept. So next one, cash flow from financing activity. And it is quite simple. Financing activity means from what all sources from which you have, or the businessman have raised the funds. In simple sense, it includes all those sources or the items in which your fixed asset has increased or decreased will be dealt in this head. So cash flow from financing activity means the financing activity of a firm include issuing or redemption of shares, share capital, issue of redemption of debentures, raising and repayment of long-term loans. These are the items changing the owner's equity and debt capital during an accounting year. And sometimes some extra items may come under this head, that is dividend paid to shareholders also comes under financing activity. As I have mentioned, in case of an investing activity, well, even though it has purchase and sale of fixed assets, some extra items might come. Likewise, there are also some extra item that comes under financing activity head. Don't worry about it. We will discuss in detail each individual items, and those items which require considerable consideration will be dealt in detail during the computation or problem areas. So let us go to the next case or next area, cash from operation. That was first head which we have learned. Cash flow statement consists of three heads: cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity. And regarding cash from operation, it is one of the most important head that comes under cash flow statement. Because cash from operation is an important source of inflow of cash into the business. So it can be calculated by two methods. They are direct method and indirect method. There are two methods for identifying the cash flow from operating activities within the business. First one is direct method, second one is indirect method. And you may sometimes come across a question where you need to find the value of cash flow from operating activity using any of the two methods, and the concept is you will get a same answer even if you follow a direct method or an indirect method. First one, direct method. As the name suggests, directly you just need to take certain values, and if you add together and subtract some items, you will directly get the value of cash flow from operating activity. That's why it is known as direct method. Under this method, all cash receipts and all cash payments from operations are analyzed to know the net amount of cash received from operations. So it is a very easiest method, and since it is the most easiest method, because of its peculiar style of computation, it is known as direct method. And the format for computing cash from operation using a direct method is like this. First of all, you need to add together all the receipts from the operations. So what are the various operations? Remember, the items that comes under this head is minimal, so remember each individual item. First one, cash sales. We all know cash sale is the most important source of operation activity in a business. So we will begin with cash sales. After that, next one, cash received from debtors. The next important source of cash from a business is cash received from debtors because of the credit sales. So these are the two major cash receipts. Next one, royalties, commission and fees. Usually you may come across questions where there will be only cash sales and cash received from debtors. Sometimes you may get a case where royalties or commission or fees items may come in a question. Such cases are very minimal and rare. Anyway, you remember that all the incomes or all the cash received on the base of operations comes under cash receipt from operation. And it is up to your logical analysis what all items that are considered as operating item and what all items considered as non-operating items. I hope you all guys are very good in identifying operating as well as non-operating. So I am not going to explain those heads again and again. We will discuss the further cases. So once you record all the cash received from the operations, next you need to identify all the cash payments. So once you add together all the cash receipts, you need to less or deduct from this total of cash receipts each cash payments during the operation. Just like cash inflow from operating activity, we will be also having cash outflow from the operating activity, such as expenses in sorts of first one, cash purchases. Just like cash sales, you will be having cash purchases. Next one, cash paid to creditors. Just like you have received from debtors, sometimes you have to pay to the creditors. Next one, cash wages. You need to pay certain amount of wages to your workers so as to maintain the daily operations of the business. That's why cash wages comes under this head. Next one, cash operating expenses. You have, apart from these three items, you might spend certain amount of cash in order to undergo the smooth flow of operations within the business. Such expenses are known as cash operating expenses. So if you deduct these four items from the total cash receipts, you will get the actual cash flow from operations. So this is how you have to find out the cash from operations using direct method. Remember, this is only the first part of the preparation of cash flow statement, because cash flow statement consisting of cash from operating activity, cash from investing activity, and cash from financing activity. So right now we are discussing in detail cash from operation, because cash from operation is the most important source of cash inflow or cash in business. And we have discussed in detail the direct method for finding out the cash from operations. Next, let us try out a case for which direct method is used to identify the cash operations. See, here a profit and loss account is given, and you are going to find out the cash flow from operating activity using direct method, because remember, from a profit and loss account you can identify the cash flow from operating activity using direct method as well as indirect method. Right now we have learned only direct method, so you have to worry about only direct method. When it comes to indirect method, we will discuss that part in future. Regarding direct method, we have discussed in detail the format for identifying the cash from operations. First of all, let us draw a format. There is no peculiar steps or methods for drawing or charting out the cash from operation statement. It is very simple. There are two columns, particulars as well as amount column. So calculation of cash from operation, direct method. Sometimes in the question they may specify direct method or an indirect method. Sometimes they may not specify direct method or indirect method. Depending upon the statement or details given in the question, you need to prepare the cash flow statement using direct or indirect. And we will discuss in detail how to identify a question whether it is comes under direct method or an indirect method. Don't worry about that. So let us discuss about how to find the cash flow from operation using direct method. First of all, the most important cash flow in a business is sales. See, here sales is given. First one, cash receipts from operation has to be recorded first. Cash sales 3 lakhs. Next, you have to go for the next income that is shown in this statement. Closing stock cannot be taken. Next one, dividend received. We can't take because cash flow from operating activities includes only those inflows that are related to the operations of the business. Dividend received means, for example, this concept belongs to me. Just for the time being, I'm just trying to explain an example. This profit and loss account belongs to me, and here a dividend received 5,000. This means I have received 5,000 as dividend for a certain number of shares which I have purchased from some other company. How can it be the activity or the operation of the business? So it is not related to the operations of the current business. So dividend received cannot be taken. So first one, cash receipts, and there are no other receipts in this statement. So let us leave like that. Let's go to the payment side. First of all, payment side, you have first one, cash purchases. See, cash purchase is given 1,40,000. Next one, wages is given. Here there are outstanding items as well as the actual amount items. Whenever you are dealing with a direct method situation, you need not have to worry about outstanding items as well as prepaid items. You just take the value of that particular expense during that financial year. See, here the wages is 20,000. This means during the year 20,000 was paid as a sort of wages. We need not have to worry about 4,000 because 4,000 is an outstanding item that does not relate to that period. So you need to worry about 20,000. So cash wages 20,000. Next one, salaries. Salaries also have outstanding. You need not have to worry about outstanding items as well as prepaid items. When it comes to prepaid item, you need not have to worry. 18,000, same has to be taken. Next one, rent. Rent also has a prepaid item. You need to worry about the amount paid during the period, that is 12,000. Next one, office expenses 5,000, that are operational expenses. That's why we are taking into consideration. Next one, see, depreciation. Depreciation is not an operating activity, it's a non-operating activity, so it cannot be taken. Next one, selling expenses. Office expenses, selling expenses, distribution expenses, that comes under cash operating expenses. So it has to be taken. Selling expenses 3,000. Next one, loss on sale of asset. It is not related to the operations of the business. Next one, provision for tax. It is a non-operating item. Remember, cash flow statement and fund flow statement is almost similar. There are only some changes during the computation regarding the flow of cash as well as flow of fund. All other methods and concepts are similar when it comes to preparation of cash flow as well as fund flow. So loss on sale of asset is a non-operating. Provision for tax is a non-operating. So there are no other items regarding the operating. So let us find the value of our cash from operation. Here it is 1,02,000. So this is how you need to find the calculation of cash from operation using the direct method. And remember, you need to understand what all items that comes under operating activities and what all items that comes under non-operating activities, and trying to familiarize each item. So just go through it and also try to familiarize the theoretical concept. Not only the problem part has to be given important, theory also has to be given due importance. So just go through it. If you have any queries, please let me know. So that's all for today. We will discuss about the further cases in the coming session. Thank you.